Actually, just noticed your headline in one of your most recent pieces, 1947 all over again. Well, Karen and I weren't around for that. Neither was Jeff. Just joking. What happened in 1947 that's happening again, Chris? Good morning, sir.
Good morning, Steve. Morning. Yeah, morning, all of you. Yeah, 1947 all over again. Yeah, of course, I wasn't around either. The parallel is it's something we used in the pandemic that actually, central banks can create an awful lot of liquidity. Governments can stimulate a lot. This is generally what happened in World War II. And in fact, if you look at the British stock market, it troughed in World War II in 1940 during the Dunkirk evacuation, when all seemed lost, which is basically the line, I think, that was around at the time. Winston Churchill gave that famous speech. And the market rallied from 1940 really all the way through to 1947. And it did that on the back of liquidity. It didn't do it on the back of a good economy. Of course, the economy struggled during World War II. And my point is really that when you get to 1947, they start to clean up the policy mess and start to tighten up the liquidity and clean up their approach to policy, fiscal, and so on. And of course, the stock market peaks then and actually goes sideways to down all the way through to 1952, so for 5 years. So the point to that 1947 all over again is that that's the point we're at, and that's the point we've moved into in this year. And we had 2 very good years under the pandemic with the sort of the funny money, if you like, and the excessive liquidity, the aggressive quantitative easing and helicopter money. And now we're at the point where they're trying to clean it up. And of course, we've had chapter 1 of that. I think tactically markets are due a bit of rally here, but realistically, it's going to be probably a long, challenging process cleaning all up that policy excess of the pandemic. So that's the 1947 parallel, here we are once again.